Hello, I'm Sam Stovall, U.S. Equity Strategist for S&P Capital IQ. In this week's Sector Watch, found on www.getmarketscope.com, I discussed market and sector returns at prior S&P 500 century and millennium thresholds. The S&P 500 closed above its 500, 1,000, 1,500, and 2,000 levels in 1995, 98, 2007, and 2014, respectively. Where have we been and how far have we come? Well, based on week-ending data from the S&P 500's first eclipsing the 1,500 level to the current 2,000 mark, four sectors underperformed the S&P 500's 33% price gain. Indeed, financials, telecom services, and utilities fell in price, while consumer discretionary, healthcare, and infotech beat the S&P 500 by a more than 2-to-1 margin. Only healthcare outpaced the S&P 500 during all three 500-point moves, while telecom and utilities consistently lagged. So what's next? Following the S&P 500's eclipsing of the 500, 1,000, and 1,500 levels, the S&P 500 was higher in price 30 days later by an average of 4.8%. A similar price advance today would propel the S&P 500 to nearly 2,100 by the end of September. In addition, 80% of large-cap fund managers are trailing the S&P 500 through late August, according to S&P Capital IQ Mutual Fund Research, versus the 5-year average of 73%. Bonus attainment may act as a near-term incentive, but better than expected 12-month earnings per share gains will have to be required to maintain this enthusiasm. In addition, we still have to survive September. I'm Sam Stovall, and I'll talk with you again next week.